Hello traders, this is Juan Maldonado from the Elliott Wave Street. It's a pleasure to share with you some of my favorite wave counts and trading setups for this week. Let's start with the euro. The euro is climbing strongly. I want to share with you something very interesting on the weekly chart. So I was thinking, it's a pretty complex bottom actually. I was thinking before that the euro needed to complete here something a little bit deeper, like a 1, 2, 3, 4, 5 sequence in order to finish this wave 1 blue. However, with this strong move up, I did this adjustment on the wave count where we are in front of an irregular flat formation for the wave 2. So once we have this strong gap, it's telling that the price on the euro it's going to continue climbing. Eventually we can have a pullback for the B wave. I'm not too sure how deep it's going to be, but we are going up to the previous wave 3 area that is around the 121 area. That's my target for wave 2. I have been following all the leg down during all these months, trading, getting in, getting out, but mainly taking shorts. But and this is the same weekly wave count that I have been having for the last years. It's the same. Was a little bit tricky the part of finding the end of wave 1, but look now how well is working. If we add the Fibonacci level for the wave 2, let's see what is going to happen here. Look, this is a key level, the 119. And then the price can go up to the 120, 121, and maybe a little bit higher. But this area, it's where we can start thinking where the euro is going to finish the move up. That's going to be a key area. Now, in terms of the long term, we need to have a retrace to get into the trend. Of course, right now it's too expensive. However, this week on lower time frames, we have more room to the upside, clearly. The euro didn't finish its sequence yet. So I'm looking for higher highs around the 117 is going to be my target for this week. Once we have the completion of A, remember we're going to have a retrace. So let's get ready to have that during that retrace we need to buy. Most people are going to start selling during the retrace. Another favorite for the week is the Aussie dollar. So look what I did here. And I sent it to my clients this morning. So I started with a buy stop order at the 66.25 with a tiny 30 pip stop loss. Here the price went up to the 66.85 area, enough to take partial profits, 60 pips of profits. I always take partial profits at 60 pips on my swing trades. And on the other part of the position open, I moved the stop loss to break even, and it was a small gain, but here I'm gonna do it again. My plan soon is to buy the Aussie again. So I don't have the signal yet. I'm waiting for the completion of my wave 2 magenta. This is the wave 1. I know it's a really weird wave 1. But here, once I have the 3-wave sequence, I'm going to plan the buy trade this week. If you take the membership on the Elliott Wave Street, you're going to get daily updates. Let's have a look at the S&P. The S&P, it's going down on the weekly chart. We have a huge move. It's not as big as the one we were seeing back in 2008. There is a nice exercise that I like to share with you that I also shared this morning with my clients, and is to measure with a line the distance of this crash, this market crash back in the 2008, 2009. If I move this line to the actual price, let's see what is going to happen. So there we go. Ta-da! It's going to be around. In order to have a similar crash as the 2008, the price is going to the 24.89. However, I think that this one is likely to be more serious because back in 2008 there was a financial crisis. You already know the story. But this time, it's a virus spreading all over the world, causing panic. Millions of people canceling their trips. Today, Italy was shut down. It's completely closed. So that's another reason, to improve your trading skills, because it's better to stay safe at home if this thing spreads out more. So that's another reason, to focus more on your trading and start working on your trading to improve, or if you are learning to reach that level that you are looking for, because this is an activity that you can work from home. You can do your trades from home. There is a lot of things that you can do with knowing how to trade. So that will be like a minimum target, 25 area, but it seems that we can go lower to the 23, 25 or something. Now, if we go to lower time frames, if we go, for example, to the 4-hour chart, last week, we shared on Twitter, on our Twitter account at Elliott Wave Street, when we were here at this area, the plan of having the retrace and the leg down on the target for the previous low. This was a fantastic trade. Our clients were able to anticipate the leg down. And look how well this thing is working. It hits the target, it breakouts, and is going down. Target for the week around the 26.50. The entry already happened. That's why it's so important that you take our subscription to have the information at the best price possible. However, we have more room to the downside. Let's have a look at the oil. The oil, it's pretty interesting because this weekly chart that you see here, this wave count, is the same one that I was having months ago. I was finding the end of X. At that time, I was wondering what could be the fundamental to have a drop on oil back to this area. That was my first target, the 42. So I was thinking, what could cause the oil to go down? At that time, we didn't have any news about the virus. It was more, the news at that time were more related with the presidential impeachment. So it was weird, to in terms of fundamentals, to think that the oil could go to that level. But I trust my analysis. I do this manually, completely manually, and I trusted my analysis completely. And if you join the service, the membership, you will check the past reports on the oil, and you will find out that this was precisely the plan, and it worked fantastic, right? So I think now that we can very easily reach the 15 area or the 10 area on oil. And actually, it's not a big deal. If we check the monthly chart, we can see that the price on oil, for example, on the 2008 crisis, 2009, it went to the 30 area, and then it recovered. And this thing will recover eventually, but not yet. I don't think so. And look, I don't have more data in my chart, but on 2003, the oil went to the 25 area, almost the same level that we are today. A little bit, actually a little bit lower. So it's not the end of the world. We have more room to the downside on the oil. If you like this analysis, I'm sure you would like to join us. Here we have on the Elliott Wave Street the membership. Also, I offer a fantastic training course. But let's have a look at the membership. On the membership, here you are going to see the levels where for the forex, the stocks, and the full access. You can go here to this page and read all the details, and you can take a trial, a full month trial for just $19. So read all the things that we have here and take your decision, or you can start with the course. Plus, I'm doing a free candlestick course next week with my candlestick secrets and my secret weapon, that is the price action trigger to validate the candlesticks. And of course, we are going to mix this up with Elliott Wave as well. So you can visit ElliottWaveStreet.com, click on the banner, sign up. It's completely free for these master classes, 3 live master classes. Here, if you scroll down, you will see all the schedule. So I'll see you there. Please have a great trading week, make some good money, and I'll see you soon. Take care. Bye-bye.